I think we're in what I would call an earnings void right now, which means all the companies from the quarter have passed through earnings, and so we've got a few more weeks now before the earnings engine starts to pick back up again. And it's not as though the macro issues are unimportant, but when we're not in a period of time where companies are talking things up and things are good, these issues like tariffs and whatever come to the forefront. And I think that's what we're going through. I still expect good things going forward for the markets.
Doug, don't you think that when the earnings start to pick up again, when they get on their company conference calls, and let's say the tariffs actually go into effect on July 6th, that all of a sudden that's going to be dominated by we're not sure what the impact could be. We see a slight slowdown. We see some cautiousness. I mean, that's going to be kitchen sink, no, in the next quarter.
Well, you know, you have to realize, too, though, in addition to the tariffs, we just had big tax cuts. And those things really won't be kicking in probably till the next couple of quarters. And I would argue that the tax cuts are much larger in relation to $50 billion in tariffs. And I would also say there's some worries that China would come back at us with $100 billion in tariffs, and they only came back with 50. That suggests that, look, you know, they want to stand their ground, but they're not really wanting to get into a big fight over this. So I don't think it's something to be concerned about, certainly, but China has stolen a lot of our intellectual property. I know that firsthand being a tech fund manager. And I think we have to hold them accountable in some areas, and I think that's symbolic of that.
Erik, what is your reaction to the idea put out in the Wall Street Journal today that corporate profits are going to slow down?
Well, I think certainly the rate of growth of profits are going to slow down. I mean, I take issue with my co-contributor here that, look, earnings were up 24+% on the S&P 500 in the first quarter. I mean, earnings growth this late in the cycle doesn't get any better than that, and the market reaction was a yawn. Again, we think because of valuations. I think there's going to be softness. You're going to start seeing guidance about the strong dollar and its implications for both revenue and earnings on corporate America. Again, we're not expecting a recession in the next year. But in the next 18 months, yeah, one could be lurking out there in early 2020, and at some point, this market's going to start pricing that in.
So you're nibbling around the heart of my question there, which is if interest rates are going up and profit growth may be slowing, it may, to borrow your phrase, may not just get any better than what we had in the first quarter, and the possibility there might be a recession somewhere 2019, 2020-ish. What does that tell you you should be doing with your equities?
Well, one of the things we're doing is we're underweighting U.S. equities because we think the valuation difficulty in U.S. equities. Think about the FANGs, right? So the FANG stocks are, you know, in an expensive U.S. equity market, the FANG stocks are really expensive on a relative basis. Like the best thing you can say about the valuations of the FANG stocks is they're not quite to internet level bubble levels. So I think the reality is the symmetry of the risks you're facing right now are asymmetrical. Very relatively modest upside with potentially major downsides if you get a major hit to earnings due to a recession. Well, so I think your portfolio should reflect those risks.
Go ahead, Doug, and jump in. I think you have some thoughts on the FANG stocks.
Yeah, I mean, first of all, FANG, the one reason I hate that term FANG, these companies have earned where they've been. I was a tech fund manager. I was on the cover of Barron's in the year 2000, so I know what the bubble was. And I can tell you the 10 stocks I was touting were all 100 times plus earnings. A lot of those companies have free cash flow yields of 3-4%. They're growing much faster. So I take issue with the fact, and the reason they are at a premium is they're the few companies that can grow regardless of the economic cycle. Doesn't mean they won't be hit hard if we go into a recession, as Apple even got hit hard in 2008. But I think they can continue to do well. So I'm not of the belief markets can stay overvalued for a significant period of time, but I don't think
they already have been.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.